Alright, let's talk about money, shall we? That thing you never seem to have enough of. You might think it's printed by governments, shipped around in armored trucks and carefully guarded in those Fort Knox-looking vaults. But here's the thing. Most of the money in our system, well, it doesn't really exist. Because most money is actually created by banks, out of thin air, using a system called fractional reserve banking. It's the financial equivalent of pulling a rabbit out of a hat, except the rabbit is trillions of dollars and the hat is a spreadsheet. Today, we'll expose how it really works, and why some economists call it a ticking time bomb. So imagine this. You've diligently saved up $100, maybe by selling your Beanie Baby collection or something equally desperate. You walk into a bank, feeling like a goddamn capitalist, and deposit your hard-earned cash. Now here's where things get really interesting. The bank doesn't actually have to keep all of your money, you see. They only need to hold on to a small fraction of it, say 10% as a reserve. That's called the reserve requirement. The other $90, they're free to lend it out to someone else. Let's say that someone else takes that $90 and deposits it into another bank. That bank, in turn, only needs to keep $9 in reserve and can lend out the remaining 81, and so on and so on. This cycle repeats, with each loan creating more deposits, and each deposit allowing for more loans. The result? Your initial $100 deposit magically transforms into $900 sloshing around in the system, and that, my friends, is the heart of fractional reserve banking. Now you might be thinking, this sounds like a recipe for chaos. And you, my astute viewer, would be absolutely right. Because this system is inherently unstable. It's like building a house on a foundation of Jenga blocks. It might stand for a while, but one wrong move and the whole thing collapses. When banks are feeling optimistic, they tend to lend out more money. This creates a surge of economic activity, but it often leads to asset bubbles. And when those loans inevitably go sour, the whole house of cards comes tumbling down. Chapter 3. The inflationary pinch. As if boom and bust cycles weren't bad enough, fractional reserve banking also has a nasty habit of devaluing your hard-earned money through inflation. When banks create more money through lending, it's like pouring water into a swimming pool. The more water you add, the less valuable each individual drop becomes. So, while you're struggling to afford basic necessities, the banks are raking in record profits from the interest on all those loans they've created out of thin air, and the worst part is, most people don't even realize it's happening. Chapter 4. Debt, the shackles of freedom. And speaking of doing well, let's talk about debt, shall we? Because this entire system is built on a mountain of the stuff. Remember how most money is created through loans? Well, that means that almost every dollar in existence is essentially someone else's debt. It's like a giant game of hot potato, but instead of a potato, it's an IOU, and no one wants to be left holding it when the music stops. We're all trapped in a system where we're constantly chasing after more money to service our existing debts, like hamsters running on a wheel that's powered by our own crippling financial anxiety. And the sad truth is, there will never be enough money to pay off all the debt in the system because, well, more debt is literally being created every single day. Outro time to break the wheel. So the next time you hear someone talking about economic growth, ask yourself this. Are we actually creating real wealth, or are we just inflating another debt bubble that's destined to burst? Fractional reserve banking is the invisible engine driving our financial system, but it's an engine that's running on borrowed time, fueled by debt, and spewing out inequality. It's a system that benefits the few at the expense of the many, and it's time we started asking some tough questions about whether it's time for a fundamental change. Next time you hear the economy is growing, ask, is it real wealth, or just more debt? Fractional reserve banking is the invisible engine behind our financial system, and it's running on fumes. What do you think? Should we end fractional reserve banking? Drop a comment below, and don't forget to like and subscribe for more unfiltered economics.